The Objective News Network, the biggest mortgage fraud scheme in American history. How are they getting away with it? On September 26, 2008, Washington Mutual Bank, or WAMU for short, collapsed in the biggest bank failure in all of U.S. history. All of the federal banking oversight agencies of the U.S. government should have known it was coming, but did not do their jobs. This includes agencies like the Federal Deposit Insurance Corporation, the Comptroller of the Currency, and the Federal Reserve System itself. The collapse was so big that it threatened to take down the whole U.S. banking system with it. The Obama White House and the federal agencies who were put on the spot had to do something to keep the dominoes from falling over to create an even bigger economic catastrophe. So what could they possibly do? Well, the evidence that we have strongly suggests they cut a backroom deal with one of the biggest banks in the United States, J.P. Morgan Chase, to divert attention away from the true causes of the failure by hopping on the banks are just too big to fail bandwagon. J.P. Morgan Chase acquired WAMU's low-risk assets like student loans, car loans, and physical assets like buildings, furniture, and computers across the country for 1/6 of a cent on the dollar. That's right, 1/6 of a cent on the dollar. An incredible bargain for J.P. Morgan Chase and Jamie Dimon with no serious liability attached. Part of a payment? But the vast bulk of the problem for the administration and the federal agencies responsible for the mess in the first place was the sheer volume of mortgage notes on residential properties held by WAMU across the country and moved into a Delaware liquidating trust. Mortgage notes that were fraught with legal liability because WAMU had been allowed by the U.S. government itself to play fast and loose with mortgage laws, regulations, and reasonable loan parameters by giving out millions of highly risky loans in a terribly turbulent economic environment. I'm sure all of us can remember the Great Recession that lasted from early 2007 all the way through June 2009. From the perspective of the newly elected president, Barack Obama, the failure of the U.S. banking system was a total political non-starter. After strengthening and working so hard to enhance the Democrat political base in the 2008 election cycle, this was certainly no political time to allow a bank collapse. That's when the scheming began among the White House and the executive branch minions in various federal agencies involved in overseeing the banking and mortgage industry in the United States. The focal point in the administration for addressing the problem became the Federal Deposit Insurance Corporation, or FDIC for short. The FDIC and other Obama administration minions entered into negotiations with J.P. Morgan Chase. But to negotiate what exactly? Perhaps it was to devise a scheme that would prevent the collapse of the entire U.S. banking system by allowing all of the mortgage notes that were formerly held by WAMU, even though they did not really own them. In this way, the Obama administration could avoid the political fallout of a bank collapse on the president's watch, while J.P. Morgan Chase could have their cake and eat it too. But the first obstacle in pulling off the scheme was that all of the WAMU mortgage notes were now held in a special liquidation trust established by the Delaware courts when WAMU collapsed. So the first thing the government and JP Morgan Chase would have to do together is quietly figure out a way to obtain the authority for JP Morgan Chase to service the original WAMU mortgage notes, which the bank did not really own in the first place. A tricky proposition, especially when mortgage laws are so clear and so well established over the 228-year history of the United States. So what the FDIC regulators, the very same people that failed to exercise proper oversight of the banking system in the first place, and JP Morgan Chase Bank did, was to all sit down together in a back room somewhere to write a special agreement called a Purchase Assumption Agreement, or PAA, that would allow them to do whatever they wanted, even if it meant breaking the laws and legal precedents set over the 228-year history of our country. After all, the U.S. banking system was simply just too large to fail. Remember, President Obama didn't need or want the political baggage of an eager, even bigger bank failure on his watch. No, indeed, not a politically good thing. Likewise, the FDIC, the controller of the currency, and the Federal Reserve didn't want the embarrassment of their own failure out there for all of us to see. And of course, JP Morgan Chase wanted to make billions of dollars in the deal with the lowest liability possible. So everyone sat down in perhaps one of the biggest conflicts of interest in all of the history of the United States and wrote a public version of a PAA that was designed to hide what was really going on behind the scenes. The public version doesn't really say anything. When you try to read it, you can quickly see that it is just a bunch of intentionally oblique. That's right, intentionally oblique legal mumbo jumbo written by lawyers of the government and JP Morgan Chase to evade scrutiny as to what was really going on. Of course, JP Morgan Chase and the FDIC won't release a copy of the real, much more detailed 18-point PAA, only selective pages. When I called the Public Information Office of the FDIC, a young lady nicely told me to get lost and file a Freedom of Information Act request through the courts if I wanted anything. Of course, this is the same court system that is part of the mortgage fraud scheme in New Jersey and across many other states. Again, the FDIC has already refused in the past to release a copy of the complete document. I wonder why. Could it possibly be that the Obama administration and the FDIC, in order to prevent a bigger catastrophic bank collapse, agreed to allow Morgan Chase to service original WAMU mortgage notes that the Delaware courts had already put into a special liquidation trust? But how could they possibly legally do that? Well, they couldn't. I can think of only one other way that they moved forward. They simply self-declared that they had the authority under some type of authorizing statute or law, which, by the way, they do not have. They do not have. Sure sounds suspicious to me. Maybe this is why the FDIC is so very reluctant to let us see all the real world and complete PAA. Why would you allow one of the biggest banks in our nation to service mortgage notes that they don't even really own? Why is JP Morgan Chase being allowed to foreclose on homes that they really don't own, even in the face of 228 years of law, mortgage law, that requires, in no uncertain terms, that you must, and I repeat, must, be able to prove ownership? Boy, it's sure smelling fishier and fishier to me. Let me say it one more time so everyone can hear it very clearly. Proving ownership of a mortgage note with original archival records signed and certified by the parties at the time of closing is an absolute prerequisite under the law before you can even try to initiate a foreclosure. Now, how does JP Morgan Chase get around this little hurdle? Well, they create a false, that's right, a fraudulent record, of course, by telling the courts that they own the original mortgage notes when they don't, as they foreclose on people's homes anyway. And they do this by forging documents with robopens and by other means to create the false presumption that they are the legitimate owner of the mortgage notes in the first place. All of this perpetrated in league with our own government, including judges and our own court system, to allow JP Morgan Chase to haul in billions and billions of dollars in the largest mortgage fraud scheme ever committed in the United States and the entire world. We intend to bring you much more on this developing story as our investigation continues. It is what it is for Monday, August 21st, 2023. Thank you for watching, and please tell your family, friends, and colleagues about us. If you have followers, please tell them too. We need your help and the help of millions of Americans as we work to get you the information you really need to get America back on track again. Thanks, and we will see you the next time for more on this developing story of the American bank fraud scheme.